Good afternoon, traders. Welcome to Stock Market Movers, where we give you all the headlines and get, of course, keeping you guys in the informational edge. Are you guys excited to dive in today's show? We got another great one for you. Today, we're going to talk about none other than the new bull market rallying continuing. PPI, we'll talk about lawsuits around Zantac. We'll get into USPS. And we'll also talk about financial stocks, Disney, Dutch Bros, Six Flags, and of course, we'll get into our Qualcomm interview. Chris Ketchy should be joining me around 1:30. We'll dive into it there with the CFO of Qualcomm. I'm excited to dive in today's show. Welcome to Stock Market Movers. I'm your host, Money Mitch, and let's go ahead and get it started. It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now, we all know the bull market is here to stay. Money Mitch. How we doing out there, traders? Let's go ahead. Let's dive into this market and what a ride it's been since the CPI. Let's take a quick look at the overall market, see what we see in the SPY today. A quick little glimpse here, and definitely tried to get back up there towards the 425. And I mean, look at the rally that we've had lately. I mean, this is the SPY, but I'm going to go ahead and call it out on the Qs. Take a look from that bottom there on of course, the June 16th, all the way up to where we're at now. We're talking about a 21.18% move. This is why I'm here saying, yeah, this is the new bull market. At least for right now, the bull market is here and it's back. The reason why we're calling it a new bull market is because 20% from the highs or from the lows gives us that bull market, just like they told us that 20% from the highs going down was the bear market start. But like always, it's always about the cycle and what inning we're in here in the bear market. To me, of course, we're really not getting into a new bull market. To me, what this shows is that we're in the late innings of the bear market. And sometimes we are going to get some of these big rallies. Are we going to just continue into this move? As you can see today, we started slowly turning around. We did get some lift. Where did the lift come from? Well, I would definitely think that the lift came from, of course, the July producers price index here, giving us a surprise 0.5 decrease versus the 0.2 increase expected here. And of course, there was a 1.1 increase that was the prior reading. And I thought that was interesting to see how we went from a 1.1 prior reading to a negative 0.5. Of course, this is the first time it's done this since 2020. And it's interesting to see that now we're really starting to see inflation peak out. The question that I ask for you guys is, do you think that there will be another ramp up? Or is it from here on out just a kind of peak and slowly going away? That's what we're going to go ahead and take a look. Of course, this draws into question what is going to be talked about with the Fed. What will they do? Will they increase 50 basis points? Will they do 75 basis points? Or maybe they do no hike rate at all. That's what we're going to be all paying attention to as investors. But let's go ahead. Let's get into some other topics out there. That's what we saw right out the gates. And then, of course, in this pre-market, we were seeing a lot of talks about what? A lot about the lawsuits on Zantac. You guys can take a look at this with GSK. Take a look at this stock, and they got a beating here. And a lot of this is after trading lower, mounting the concerns of litigation about the recalled heartburn drug Zantac. I got to say, I took this myself, so I'm a little bit concerned myself here. But Zantac was the one popular antacid that has been drawn a fury of U.S. personal injury lawsuits. This has also been talked about with Morgan Stanley analysts saying that this potentially could bring $10.5 billion to $45 billion in damages. Zantac was withdrawn from the market in 2019 after the U.S. Food and Drug Administration said that it appeared to produce an unacceptably high level of cancer-causing chemical when exposed to heat for as little as 5 days. Definitely not what you wanted to see if you were GSK fans or SNY. And for some reason, I mean, you guys could bring it up maybe, but definitely Haleon also stated here that it is not in the party here, but that's definitely taking a hard hit. That's HLN. And look at that one, down, right back down. They did state that they're not a party of the litigation proceedings and that has never marketed the drug in any form in the U.S. And so there you guys seeing them all taking a hit there, all around the lawsuits around Zantac. It's interesting to see them definitely get a hit on that. I'm a little bit concerned because I have been taking that. I mean, if you guys probably had heartburn before, you probably did take Zantac back in the day. But we'll go ahead and see how these kind of affect the different healthcare stocks. For a while there, they were taking a beating in the pre-market. They did bounce in the open market. We'll keep watch to see what happens there. All right, that's going to do it for at least the first opening conversations here. I'm going to go ahead and get into our first interview today. We got a lot to talk about today. We're going to try to fit everything in. Like always, there's a lot to go through. So let's go first up. Our first interview now is going to be with Chris DeMuth, hedge fund manager at Rangeley Capital. Welcome back on, Chris.
Great to be here. Thanks for having me on.
Yeah, excited to talk about what we love the most, right? And so the battle continues, and I'm going to call him my resident alien, Elon Musk, because I always say he's probably from Mars because the innovation that comes out of him is great. And then the battle between the bot takeover that is Twitter. What happens here? Court battle set for October 17th. Tell us the recent development and who finally might win here.
You know, it's amazing. I thought we'd need some new topics since last we spoke, but so much has happened since then that my mind has been on Elon Musk and Tesla and Twitter, and there's just a ton of news. I have a upcoming piece that I'm writing about it, but I'll kind of preview it here a little bit, and I'm going to call it Elon Musk versus Elon Musk, how his tweets kill his case against Twitter. And there's this kind of funny dynamic because he's been constantly out in the public discussing this, kind of responding to other people and coming up with his own things to say that's clearly very at odds with his lawyers at Skadden Arps. So he has these two sides. I've been in Delaware as a witness. I've been in Delaware as a plaintiff. And the first thing my lawyers tell me, and all lawyers tell you going into Delaware court, is, of course, always tell the truth, but don't volunteer anything. And especially finance guys and corporate guys and people who are used to being the boss think, well, I'm right and the judge is smart, so why don't I just sit down and have a chat with him and explain it? And that is not how court works. That is not how the law works. And it's not how non-lawyers like me and Elon Musk should approach Delaware. It's kind of a little bit unusual that you're paying for and employing these specialists who are in charge of the situation, but it's not that unusual. I mean, if you go into surgery, you're not the boss of the surgery. You write the check and the surgeon kind of does their thing. But I think that there can be some tension sometime if you feel like it's a topic you know an enormous amount about. So legally, let me just walk you through two kind of bullet points on how he's killed his case, but then financially, how he's winning his case and how he's getting a price cut. So legally, two things. One is he needs to be able to show that Twitter somehow violated their representations in the merger contract, the things that they say are true about their company that they're selling to. And they have a lot of discretion about how they go about presenting to him. And he then has this legal case that he's trying to put together, responding to them. And then he has this third thing going on, which is he's talking about it constantly on Twitter. And so, for example, the company has an obligation to share information with their merger partner that is relevant to closing the deal and consistent with their business judgment. Okay. His legal case is that they are not living up to that. I think it's a hard case to make, but that's the case. Then publicly on Twitter, he comes out and says, oh, by the way, if this doesn't work out, I might just launch a competitor. Well, the business judgment for a company like Twitter talking to a potential competitor completely changes where the bar is for what they should share with him. Much, much, much less than if he was not going to otherwise be a competitor. So that just obliterates the whole argument about the disclosures from Twitter to him. Secondly, he chose to do no due diligence, and he said kind of retrospectively that they defrauded him because of the bots. Okay, you can say that. It's I like words too. But at the same time, he comes out on Twitter saying, everybody knew about this. It was so obvious. Well, the standard is not just, are there bad things at Twitter? Is Twitter perfect or imperfect? The standard is based on what he knew when he signed voluntarily, sober, sane, free on his own recognizance. He signed a piece of paper, a definitive contract. Based on what he knew that day, did he rely on this bot representation? And the problem is, if it's something that everybody knew about and was obvious, and it was just this frustrating problem to him, which I think is not only true, but something he made clear at the time, then the idea that he was defrauded by this becomes an impossible claim to make legally. So I think legally, that's how he's lost the case already on Twitter in real time for all the world to see. But then there's a second part of this, which is how he's at the same time won a price cut financially, which I'll get to in a sec.
No, definitely. That seems really interesting. Now, I agree with you there. Same thing there. I mean, if he's killing his own argument by what he's saying on Twitter, and it's almost like for a little while there, he went quiet. And I think a little part of us were like, maybe it was Twitter's board that was like, maybe let's just take it easy a little bit on the kind of the tweets. And I think even Tesla board was probably telling him like, let's take it easy on the tweets. It looks like his own, it looks like his tweets just kind of are self-incriminating himself and kind of ruining his battles chance here. And like you said, maybe he should rely on the specialist to tell him on what he really should be talking about. But let's go into the second part here. What happens?
Humility dictates that when I'm talking about the richest guy in the world, who manages to be CEO of several companies at the same time, who's endlessly creative and has strokes of brilliance. Okay, so what is he doing? So he's not stupid. If your theory is he's stupid, then you need to back up and re-examine your premises, because that's not a good theory demonstrably. So if he's doing something that self-sabotages his legal game, he's playing another game. He's not just playing a win this legal case game. He's playing a financial game. This was never about the bots. It wasn't about the bots when he signed the deal. It wasn't about the bots when he complained about the bots. It's not about the bots today. It was always about Tesla. It was about Tesla's share price. It was about Tesla doing far worse than he anticipated in the weeks following signing this deal to buy Twitter. Incidentally, Twitter's competitors, their comparable stocks, did pretty badly too, and tech did generally. But most importantly, Tesla. If you look at the price of Twitter denominated in the shares that he had to sell, and your mental model was how much Tesla and Twitter do I own when this is all done, it became very unpleasant as Tesla's stock did very poorly earlier in the year and then did very poorly following the definitive deal. It's since recovered significantly. So if you look at the kind of net wealth effect, including the tax effect, including everything he had to sell, including the fact that the process made other equity co-investors shakier and might even make debt investors shakier. He could be on the hook for more and more. But the higher Tesla's price goes, the more willingness he has to kind of own the net effect of all of this. And so the fact that while he was able to make this deal look shaky, much shakier than it really was, that helped Tesla's price rebound. There was this kind of reflexivity that the more he could convince his Tesla fans to go along with this, and the pluckier he could be about Twitter, the higher the price went, which he was able to sell into billions and billions of dollars of shares. And now he's able to get out at a price where he's comfortable with the net effect. So he's really has accomplished something, and far more in terms of his ability to sell Tesla at high prices than the legal costs, including the legal cost of a case where he's paying both sides at this point. So he's paying very expensive Skadden Arps lawyers to defend him. He's also paying very expensive Wachtell Lipton lawyers to defend Twitter, because he's going to end up paying for both of that. If he wants to appeal, he'll have to pay 5% plus the discount rate, statutory interest for an appeal. And I predict that appellate decision will be one that the appellate court will be able to write in 140 characters or less within a month of Chancellor McCormick's decision by year end, affirming it and forcing the deal to close at 54.20. And then one last point on his Twitter commentary, the fact that he just sold 6.9 billion, Elon, of Tesla, doesn't necessarily admit that he knows he's going to lose or even expects to lose. He's going to lose. I don't know if he knows that yet. But what it does admit is that if Chancellor McCormick rules for Twitter, which she will, and rules for specific performance, which she will, forcing him to close the deal, it's the first admission that he will comply, that he's not going to somehow become a domestic pirate and hold out in Texas and battle Delaware, which was this thing people were saying a lot. It struck me as absurd for a CEO of Delaware corporations, including, would he go rogue? That would absolutely maximize our entertainment value. If we wanted fun stuff to talk about on this podcast, that would be the optimal outcome. Kind of where's Elon and the Delaware bailiffs trying to chase him down and force him to. No, that's not going to happen. And I think that his most mature moment was kind of the admission by raising this extra money that if it goes against him, probably sometime in December, probably for $54.20, although now at a much lower cost denominated in Tesla's recovered, that he'll pay.
Yep. I think that also just shows to us what you said earlier to start with, is that he isn't dumb here. Let's just be honest. No. And so all of these have been kind of measured movements that he's been trying to do. And it looks like at least he's ready. If it does fall against him, he'll have his way. And who knows, maybe Twitter gets what they wanted in the first place, and then have Elon kind of run the show. And hopefully it can bring the price back up to where it was before. Twitter has been coming on up there. It seems like the arbitrage traders definitely picked it up there in the 30s. And so we'll see what happens here. We'll have you back on. Thank you, Chris DeMuth here, hedge fund manager at Rangeley Capital. We'll have you back on as we get closer and closer to October.
Excellent. Thank you so much. Nice speaking with you.
Thank you. And definitely look out for that article. I have been watching those articles that Chris has been putting out on Twitter. They're one of the best. So as soon as I get word of that, I'll be putting it up on my Twitter so you guys can see it also. If you haven't done so before, definitely follow Chris DeMuth. I'll make sure that we get his Twitter in the description. All right, coming on up next in just a little bit here at 1:30, we'll be getting and starting to dive on in with Qualcomm CFO. I do got one more headline to get into, so don't go crazy just yet on me. Let's get through this Disney headline. I do want to talk about their earnings and get through that. So let's talk a little bit about what we saw from Disney. So Disney is actually pulling back a little bit here, even though really good earnings out the water, right? I mean, it's okay to get a little bit of a pullback as long as we don't give up all these gains today. Let's talk a little bit about what we saw from Walt Disney. Walt Disney Q3 EPS coming in here at $1.09, beating the dollar estimate here. And really, it all comes down to subscribers, right? I mean, we could talk about the sales, but the subscribers coming in here at 14.4 million Disney Plus subscribers added in Q3 2022, beating the estimate of 9.8 million. They lowered the 2024 guidance, though. Disney did say that the main Disney Plus service, excluding Hotstar, to reach 135 million to 165 million subscribers by the end of fiscal 2024. They did talk about some price changes. Let's talk a little bit about those. Let's take a look at some of those changes. You guys can see it here. I'll take off the banner so you guys can see some of these. And it looks, I mean, you guys can see it here. Looks like, you know, Disney taking a little bit of a page out of Netflix book. Of course, they're going for the advertising kind of with ads and without ads subscription model. And you see Disney doing the same thing here with their basic with ads at $7.99 and their premium with no ads moving up to $10.99. And so another thing, of course, you see here is you see Hulu going up there. You see ESPN and even offering the UFC pay-per-view plus annual. I think that one's an interesting one to note, but also, of course, they increased the bundle. And I think that that's an important one there. I mean, I've had this bundle before. I don't have it right now, but they did increase the one without ads that, of course, includes Disney Plus, Hulu, and ESPN Plus. With ads would increase to $12.99, and without ads it's going to $14.99. Sorry about that there. They were a little bit confusing in how I wrote it down there. But that's the biggest move here. And I think that, you know, it's a little bit higher, but is this enough to make some of the subscribers go away? I don't think the subscribers are going to go away from that raise of the price. But what everyone was watching really was the park numbers. I think that that's what everyone thought was really going to push them to the next level. And if you take a look, Walt Disney's park and experiences and product revenue went up $7.39 billion, up 70% year over year, and beat the estimates of $6.65 billion. This was important, but really, where did the driver come from? This all, really came from the main driver that was U.S. resorts. So it really wasn't the parks. It was kind of the resorts making up for a lot of the money lost, especially because the international parks lost money here. So you guys can see that definitely the traveling to kind of Walt Disney was there. They were staying in these expensive U.S. resorts, passing down the price down to the consumer. And people paid up. Parks and experiences up 70% year over year and beating the estimate there by almost a billion there. So it's interesting to see that. You can see that definitely Disney is coming back. And how did this react with Netflix? Well, you can see Netflix actually went up after hours and then kept going up in the intraday. I think this is definitely having an effect and could change around the story that Netflix has been fighting. Now you're seeing it come back. Can it get into that shadow zone? We'll see what happens if it can get back into right up here. I think the close here is, we got 245. If we can keep holding up there past the 245, get into the 250s, I think, you're going to be looking to see if you get a shadow fill on Netflix. This also affected Warner Brothers. Of course, we saw their earnings earlier in the month, and that wasn't the best, but look at that raise in the intraday. You can see Warner Brothers actually getting the lift, and a lot of this coming from, of course, that Disney report. All right, that's going to do it for our Disney talk and the streaming talk. Let's get out of Warner Brothers. In a second, we'll be diving into our interview coming on up, of course, with Qualcomm's CFO. Let's go ahead. Let's get into one more topic before we get into that, as we get joined with Chris Ketchy. He should be here in just a few moments. All right, let's go towards now Dutch Bros. Dutch Bros is one of my favorites. I don't have this stock right now, Bros, but full disclosure, it definitely is one of my favorite stocks. Let's take a look at how it's doing after their earnings here. As you can see, it kind of really pushed on up. A lot of this coming after the beat here. They beat here on their sales, missed on their EPS at 5 cents, missing the 7-cent estimate, and sales at 186.4 million, beating the 182 million estimate. It looks like the Dutch Bros bounced back. Of course, they were struggling last earnings call because of the changes in prices, and they were able to beat kind of the sales estimate here, which really gave them the lift. Right. Another thing that's not hurting it is Starbucks has been really lifting off, coming back on up. So I think that this also is helping it out. The outlook that Starbucks isn't going out also. And so Bros coming on back there. We'll see if it closes above 50. That's what I would see for a nice bullish move, but not a bad one there in the Dutch Bros. All right. In a second, we're going to dive into our interview. Now it's time to bring on my friend, one of the best writers on Benzinga. I would say the best, but we won't get into that conversation. Let's bring on my friend here, Chris Ketchy, one of our top writers, to go ahead. He's going to be the one leading the interview here. I will get in the back here. I'm going to try to bring up the investors presentation for you guys to follow along. I'll throw it up in the chat also, just in case you want to pull up the presentation. How are we doing today, Chris?
I'm doing great. How about you, brother?
Oh, excited to get into the interview. You know, this is one that you and I have definitely been after for a while. I'm glad that you're able to go ahead and nail it today. We can take a quick look. We don't want to get too much about pricing, but I have been watching Qualcomm come back from those lows. We'll see what happens here. Of course, a lot of focus after NVIDIA's pre-announcement and Micron warning. So I've been waiting for this interview. I know that the chat is definitely starting to buzz. We're going to dive into that in just a second. I'm going to play a quick Benzinga Pro trailer here, and then we'll be diving into our interview just after this.
Introducing Portfolio Synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protected connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
Hey, all right, let's go ahead. Let's dive into it here. I'm going to put myself in the background and I will let Chris take lead here.
All right, everyone. Thanks for that intro, Mitch. Super excited to welcome on to Benzinga TV, the financial officer of Qualcomm, Akash Palkhiwala. Akash, thanks for joining us today on Benzinga TV. All right, looks like we're working on getting Akash on here. Again, CFO of Qualcomm, one of the biggest companies out there, recently reported quarterly results. We're going to get into that. We're also going to get into the CHIPS Act, right? A lot of talk about what that means for chip companies. Where does Qualcomm fit into that? We also have some rumors of Qualcomm working with Apple further down the road. And then Qualcomm did sign an extended partnership with Samsung recently. Very exciting. I had the privilege to talk to Akash about that recently on the phone. And now you guys get to hear from him live on Benzinga TV. You know, that part extending past just handsets, right? So before it was just Samsung handsets, mobile phones, and now we're getting into PCs, tablets, and other areas. 5G, also 6G. Some of you out there may not even know that 6G is a real thing and coming. We'll talk about that. We'll also dive into Qualcomm's diversification, right? So as I said, right now, heavy in the handset market, mobile phones, but they are expanding into new areas, right? So the Internet of Things, automotive, right? We hear a lot about connected cars, autonomous driving. All those things need more chips, more computers on board to make those cars operate under those new and exciting technological advances. And Qualcomm has a whole automotive division that has a massive backlog of deals I mean, there's just so much to talk about. Very exciting company. And of course, as I said, recently reported those earnings. I did write up the earnings recap on Benzinga.com. Also did an analyst recap. Analysts were, they liked the report, right? They liked what they heard from Qualcomm. They also liked the forward-looking guidance as well, which we'll dive into with Akash here in a couple minutes. But yeah, so how we doing,
How we
Mitch?
doing? No, we're doing good. It seems like we'll have Akash in a couple seconds here. He's on the way. Don't worry. He'll be here soon, guys. Now, one thing I did want to help you there is you were going over, let's just touch those fiscal numbers really quickly. I do have kind of the presentation here. I did also give you guys the link in the comments there. If you guys want to follow along here, just click that link that I put up there. That's from the investors.qualcomm.com. If you just want to go to that site, you can do it so also. So Chris, I'll let you go ahead and lead on the highlights here, but it's interesting. I like the way they present it. Nice little numbers here.
I do. I really like this presentation, Mitch, and shout out to you for bringing that onto the screen today. We're going to be walking through some of those slides, do interactive throughout this interview. But yeah, Qualcomm reported revenue of $10.9 billion in the third quarter, up 37% year over year. This was a number that beat, and they had great numbers all around across those segments, as I said, as they work on diversifying from just handsets and mobile phones. You also see the bottom right-hand corner there, something we're going to talk about, right? They have a automotive investor day coming up in September in New York. So we'll dive into that as well. Looks like we have Akash ready to go. So without further ado, everyone, again, the Chief Financial Officer of Qualcomm, Akash Palkhiwala. Akash, thanks for joining us on Benzinga TV today.
Thank you very much for having me, Chris. Looking forward to this conversation.
Awesome. So Akash, we spoke on the phone briefly after you reported those third quarter financial results. Let's start there. Revenue was up 37% year over year to $10.9 billion. What were the key highlights for you as the CFO, and how was Qualcomm able to secure this growth?
Yeah, so Chris, we were very excited about the quarter we reported. I mean, year over year, we grew earnings by 54% in addition to the revenue growth that you mentioned. And we had record revenues both in IoT and automotive. And within handsets, we saw tremendous year-over-year growth in a market that's been relatively challenged because of the overall macroeconomic situation and because of COVID. And so we're very proud of how well we're doing in the overall economic landscape. And in spite of that, we continue to deliver extremely strong results and really execute on our strategy of transforming ourselves from a phone chip company to a connected processor company, and really diversifying into automotive and IoT, which is the top priority for Cristiano and the company going forward.
Awesome. Yeah, we're going to dive into automotive and IoT in a minute here. I did want to hit on that Samsung partnership, right? So Qualcomm, along with earnings, announced an extended partnership with Samsung that includes additional devices all the way out through 2030. Why was it important to extend with Samsung, and how does the extension into new 5 and 6G products work?
Yeah, so Chris, Samsung obviously is the largest handset company in the world. They are an incredibly important partner to us, if not one of the most important partners, if not the most important. And so we are very excited about this agreement that we reached with them. There are 3 components to it. The first one is licensing. So as you know, we have a very large licensing business, and with Samsung, we agreed to extend our licensing agreement with them all the way through 2030. And the other key part of this agreement is, in addition to 3G, 4G, 5G technologies, this agreement also includes 6G, which obviously is going to be the next standard to further improve wireless networks, and we're going to be working with Samsung together on it. The second component of the agreement, beyond the licensing, is on the chip side for premium tier handsets. So Samsung is a very strong player in that part of the market, and now we have an agreement with them, a multi-year agreement for them to use Snapdragon chips on a global basis. And if you look at the announcement that they made yesterday, they announced the Fold 4 and the Flip 4. And for both of those devices, they're going to use Samsung. They're going to use Snapdragon on a global basis as the chipset provider. So we're very excited about that. And then the last component of the agreement is us working with them on other devices, including tablets, personal computers, augmented reality and virtual reality devices, and more. So very comprehensive agreement for the two companies. We are very aligned in our mission as we look forward and grow the company and diversify it away.
Speaking of diversification, right? Internet of Things, you mentioned a couple minutes ago. A lot of us know about the IoT market, but can you maybe share with our viewers here, what is Qualcomm's place in the IoT market?
Yeah. So, if you look at the overall trend in the industry, you're seeing everything connecting to the cloud. And so digital transformation of all industries, and you can think of it as manufacturing, distribution, transportation, utilities, healthcare. Each one of these industries is looking to connect all devices that they have to the cloud. Now, if you think about today, where the world's at, the most cloud-connected device is the smartphone. And we're obviously an incredibly important part of that ecosystem. And what we're able to do now is to take the technology that we've created for the smartphone and bring it to all these industries that are looking to connect devices to the cloud. And when you think about these cloud-connected devices, there are three key technologies that they need. They need connectivity, whether it's Wi-Fi or 5G. We're a leader in both. The second is they need processing, low-power processing, which, again, is something we do in phones, and we're going to bring that to the connected intelligent edge. And the last one is AI at the edge, and be able to process data, analyze data before we send it to the cloud. And that's something that we'll also be able to bring from the phone heritage into these connected IoT devices. And so, we're naturally positioned to benefit from this change. That's what our IoT business is based on. And we're honestly just at the beginning of the transformation of industries. And so the opportunity in front of us is unlimited. And it's really a question of how we can build the channel to access these devices with our customers.
Akash, when we last spoke, you told me that everything that connects to the cloud needs Qualcomm chips. I know you probably can't get into specifics on every company that you work with, but can you just kind of share what Qualcomm's place is, maybe among Fortune 500 companies or some big tech companies out there that you're working with?
Yeah, so let me maybe give a couple examples to make this a little more tangible. So maybe I start with Cisco. If you think about Cisco, they have a very strong presence in enterprise access points for Wi-Fi. And Wi-Fi is obviously key to transforming the enterprise connectivity process, especially as enterprises go to a more of a hoteling concept with not having dedicated desks for every employee. We supply the chip that connects the Wi-Fi routers in enterprises to the cloud. A second example is a device like Roomba in your home. As I'm sure you guys know, Amazon recently announced that they're going to acquire Roomba iRobot. And that's something that is also a device that uses our chip, and we connect it to the cloud as well. Maybe a final one is a security camera in either a home application or an enterprise security application. These cameras are constantly scanning for images. They're tracking motion. They're tracking movement in front of them. They're doing AI at the edge and then sending relevant information back to the cloud. That's another area that our chips could be used in. So it's honestly, it's limitless. There's a lot of other devices I could go through, but hopefully that gives you a sense of the kind of opportunity in front of us.
Akash, thanks for giving us, those examples, those real companies that you're working with. iRobot, getting acquired by Amazon. You guys heard it here. Qualcomm in the Roomba, for any of you guys out there who own Roomba. Akash, as Qualcomm diversifies further, One area that's drawing attention is the company's automotive division. So in that presentation, it lists a pipeline of $19 billion in design wins for the auto division. What makes up this total, and how could it play out over the next few years for the company?
Yeah, we're very excited about what's happening in the automotive industry and how we can participate in it. I mean, as everyone knows well, the car is going through an incredible transformation. In addition to electrification that's obviously happening, we're also seeing cars becoming supercomputers or highly capable smartphones on wheels. And as that transformation happens, it requires technology from people like Qualcomm. So what we have is this concept of a digital chassis that we provide to the automotive companies. And think of the digital chassis as a set of chips that sit on top of the physical chassis of the car. There are three parts to our value offering in automotive. First is connecting every car to the cloud. And it's very analogous to the IoT discussion we just had. Just like every device in IoT is going to get connected to the cloud, every car going forward will be connected to the cloud. And it requires 5G, Wi-Fi, Bluetooth, GPS, power line communications. There's just a tremendous amount of connectivity technology that's needed. And we are in a great position to be the supplier of choice for those technologies for automotive companies. The second part of our digital chassis solution is digital cockpit. And think of digital cockpit as the transforming the experience inside the car. So this is your dashboard. This is the entertainment console, rear seat entertainment, rear view mirrors in the car. All these devices are being replaced to become smart, and they really have a smartphone-like experience. And as that transformation happens, we can bring what we have in smartphones into those devices as well. So that's the second part. The third part, which is a big transformation in the industry, is ADAS going to autonomous driving. And this is another area where we can bring technology from mobile and make it available to our auto partners. As you might have seen, we acquired a company called Arriver that brings ADAS software capabilities, working with auto companies for several years to Qualcomm. And we're going to combine our software, Arriver software, and BMW software, working closely with them to deliver autonomous driving capabilities to BMW cars going forward. So that's just an example of one customer who's working very closely with us to deliver on this vision. That's the combination of the three things that make up the digital chassis. We have a lot more to talk about on this topic. And as you mentioned earlier, I think before I joined, we have an Auto Investor Day planned for September 22nd. And we're looking forward to having the opportunity to tell our story, to explain why we have an opportunity to win big in this area to our investor base.
Akash, you just highlighted that Auto Investor Day, September 22nd. Can you just give us a brief teaser? What can investors expect from this event? Will it feature some OEM partners, product demos, any maybe announcements coming from partnerships?
You know, the whole purpose of the event is to highlight where our business stands today, why we win where we win, and what things we're looking forward to, and the partnerships we've created with OEMs. And so the answer to your question is all of the above, right? There's a tremendous opportunity for us to highlight what we're doing there, and we're really excited about what we're going to bring forward for the investors to see.
Always love the all of the above answer, Akash. So thank you for that, and we're looking forward to that event from Qualcomm. You mentioned the Snapdragon 8 Plus. Why is this so important for Qualcomm's future, not only in that Samsung partnership, but working with some other companies as well?
Yeah, so when you think about our Snapdragon 8 Plus product, it is the leader in performance chips for phones globally. And so it's not, Samsung is obviously the one of the most important partners we have, but other OEMs like Xiaomi, Oppo, Vivo, Honor, all these devices, Motorola, they're all going to launch phones with these chips. And so we're very excited about the roadmap that we have and how the Android ecosystem, which makes up over 80% of global phones, is going to be able to leverage this chip and the other roadmap that we have.
So Akash, along with third quarter results, we also got a better look at fourth quarter guidance. So revenue of 11 billion to 11.8 billion and earnings per share of $3 to $3.30. What goes into this total being estimated higher than the third quarter results? Is this some seasonality or increased product wins?
Yeah, I'd say it's both, right? So we're excited about what we have coming up as we look at the September quarter, and then we look at the December quarter as well. There is a seasonal element to it. We do see flagship phone launches towards the end of the September quarter, going all the way through the holiday season. But you also have the secular benefits of the growth areas that we just talked about in IoT, automotive, and handset as well. So it's a combination of those. We will start seeing the benefit of the Samsung agreement on the chip side in the March quarter as they launch new phones. But we're excited about what's in front of us, and in the short term, we all have to navigate through the situation we're in. But even with that, we're guiding a year-over-year growth of 24% and sequential growth on top of it.
So Akash, when we last spoke, we talked about the CHIPS Act, which of course has now been signed into law. Can you just break down a little bit, what does the CHIPS Act mean for Qualcomm as a company and for the overall chip industry in the US?
Yeah, so this is something that we've been very vocal about and very supportive of. We're extremely excited to see it finally happen. And our objective is to ensure that there is global availability of chips. Our foundry partners are able to build their foundries across the world, and this is a great area where the U.S. can expand leadership at leading nodes across the foundries and semiconductor technology. So we're looking forward to take advantage of it. We're going to work with all our foundry partners as they expand their presence in the U.S. To use more of that capacity, and it's something that we absolutely support.
Akash, last question from me here. I know you can't get into specifics, right? We have this rumor that Apple's going to be using Qualcomm on the new version of the iPhone after some initial reports said that Apple was going to, make its own product for that phone. So since you can't share if Qualcomm will be in 100% of iPhones, is this something down the road that will be communicated by Qualcomm, will be communicated by Apple, or kind of left up to investors to decipher in the numbers?
Yeah, so we'll talk about it at the right time. For us, the most important thing is to deliver the right product, and we're very, very proud of the leadership we have in 5G chips. We are very confident that as you look forward, we'll continue to deliver the best chips available. And that's the basis for our partnership, not just with Apple, but with all customers.
Awesome. Well, Akash, that's going to do it for my questions today. We got through so many questions. There's so many great answers, great responses, and so much to look forward to with Qualcomm again with that Auto Investor Day, September 22nd. I'm excited to hear more about what that connected car and autonomous driving looks like for Qualcomm. Chief Financial Officer Akash Palkhiwala of Qualcomm. Akash, thank you so much for taking time out of your busy schedule and joining us today.
Chris, thanks for having me. Always great talking to you.
Awesome. Till next time. All right, everyone. I'm going to bring Mitch back on here, but Akash, the CFO of Qualcomm, guys, this was a huge interview for Benzinga, right? One of the biggest companies out there, one of the biggest players in the chips market, Mitch. And let's face it, we've heard a lot about chips recently, right? CHIPS Act is top of mind. With that getting passed, we are going to see increased activity for chips in the US. What do you think of that, Mitch?
I think it was awesome, and I love how the way that you worded that last question. I would give you that thumbs up for that one. So chat, if you guys enjoyed Chris not only getting to, of course, the main questions that everybody wanted, but even asking about the Apple rumor, give us a thumbs on up if you guys enjoyed that interview. Chris Ketchy here, one of the best. And if you guys aren't following him on Twitter, well, I think you're doing yourself a disservice. So definitely check him out at Chris Ketchy. He gets to all the best questions. So I know that we'll be having you back on Stock Market Movers to talk to some great CEOs and also give us some insight. I always look for Chris to give me some insight on maybe some trade ideas that are working out there. So thank you for coming on today, Chris, and nailing down that interview.
My pleasure, brother. Till next time.
Till next time. All right, guys, if you guys haven't seen Chris Ketchy before, he's on the roadmap also. He talks a lot about the NFT industry. That's going to be actually coming on next here in just a few little moments. So if you want to stick around and find out why I think Chris has such great insight, stick around for the roadmap. That'll be coming on next. Now, let's take a quick look. Let's go back to the overall market and see what we're doing now. Of course, I wanted to take a quick peek at Qualcomm. I was watching it. And we'll see if it can continue the run. It had a nice run in the intraday. We'll see if it can close back above the 150 level. That's what I'll be watching. But let's go to the SPY here. SPY trying to hold on here. I think if it can just close above 417 for me, I'll be feeling good in the bullish camp. Of course, I've been in the bearish camp, right? And so with that being said, you always got to be able to flip as an investor, trader out there. You know, if you're a long-term investor, I kind of understand why you stick to more your guns and your longer term outlook. But for me, that push above the daily range on the SPY is something definitely to note. And now that we're out of that daily range, unless we can come back into that range, I'm going to be still feeling to the bullish upside. That's why you guys see that green line there for me. And it's looking good here. Now let's go into what was hot and what was not today. Before we get on out of here, energy really leading us on up and getting back on up there. So if you were seeing some energy names doing well today, of course, you can do this by some high cap names. You can take a look at ExxonMobil really getting that lift up. So looks like oil is coming back a little bit, something to definitely keep an eye out if you're looking to see inflation peak or not. I think a lot of it's going to depend on how the oil prices do in the next couple of months. Chevron getting back up there. I was trading Gush today. I got a nice trade on this one. Didn't capture all this move though, but nice move on up there if you're a day trader trading Gush. So it was a good day there. Even BVN, I know that a lot of people were watching this one. And look at that move. Nice push on up there. So definitely keep your eyes on some energy plays. Was also watching some utility plays get back towards the high side there. NEE getting some nice lift. And one of the areas that we've been watching is regulated gas, right? Because of the UNG trade, right? Natural gas trade. I think it's going to get booming again. So one of the areas that I'm watching is some utilities here. CNP is one that I'm watching for that next step up. One of the leaders that we've had is NFE, and this has continued to run. Look at this. We've been watching this for about 2 weeks now. Look at that lift. It's been about 40% run in about 2 to 3 weeks. So keep these ones on your radar. Next one setting up also NI here, Nui Source. Nice little move if it can close above 31. We'll keep these on our radar. What was down today? Well, the strongest that was strong yesterday, right? Technology took a big leap yesterday, but pulling back today, Apple in the red, Microsoft in the red, Google in the red. And when your major leaders go and take that step back down, it doesn't mean that you're getting crashed down, but definitely getting a little bit of a pullback day. So leadership showing us a little bit of weakness, something that I will keep on watch. But hey, TSM up into the green. This is one that I've been watching to see if it was setting up for a short opportunity with what was going on in the China situation. But it looks like it's turning around, trying to get back to the 92 level. That's what I'll be watching for upside outbreak. We'll see what happens there in TSM and what happens in some of these chip names. Look at NVIDIA trying to make its way back. And we saw Micron fill that whole gap yesterday, and it doesn't only fill the gap, it actually gets into the green again today. And so this is why it's important to stay up with the catalyst and see what's going on out there. Another catalyst that you guys could have caught this morning was the Six Flags earnings. Did you guys see Six Flags disaster stock of the day in their earnings? Let's take a look at what that was. Their EPS came in here at 53 cents, adjusted EPS at 68 cents, down from 81 cents a year over year. Sales at 435 million, missing the 518.49 million estimate. Six Flags definitely getting hit hard. I didn't expect to see this, of course, with the Disney report, but that just goes to show you that definitely Six Flags is not doing as well as Disney here and really struggling. Even came down in the intraday. So we'll see if it breaks down through the 20s, but this has been an ugly turnaround there in Six after it was trying to get over a kind of multi-year trend line. It tried to get back above the 445s, but couldn't do so and has been ugly ever since then. All right, that's going to do it for our show today. We got a couple of seconds left here, so if you guys got a ticker in the chat, feel free to throw it in here. I'll give a quick second here. How we doing out there, guys? Let's get some likes on up. Come on, guys. We've been getting through all the headlines, got through a great interview with Qualcomm CEO. Let's review the topics that we had on today's show. We talked about the new bull market rally and continue, PPI, lawsuits on Xantex, USPS, financial stocks, Disney, Dutch Bros, Six Flags, and Qualcomm interview. And I just realized we missed that USPS headline. So let's get right to it. So one of the things that I wanted to talk about today was USPS planning to buy 25,000 EVs. Why is this important? Because they're raising what they were trying to get from Akash. And you can see probably Akash getting a nice little lift on up here. Of course, this is coming out of Reuters. It's proposing a purchase of at least 25,000 EVs out of its initial order of 50,000 next generation vehicles for Akash Defense. And you can see that definitely pushing up Akash today. We'll see if it can continue driving. It's not a bad play to keep your eyes on. Of course, for a while, this was mentioned with Workhorse. And so we'll see what happens if for any reason there is any mention of Workhorse. But this is just Akash right here. So I would keep my eyes on OSK. It could take that next step up. But that's going to do it for us today. I hope you guys enjoyed getting through all the topics and, of course, getting through the expert opinions. We talked about the Elon Musk situation. So if you weren't able to catch that, definitely hit the rewind. That was in the first 10 minutes of the show. I'll catch you guys a little bit later on At the Close. Up next, we got the roadmap. Going to get you into some NFT action. I hope you guys enjoyed Stock Market Movers today. This is the show where we give you all the headlines and keep you guys in the informational edge, of course, with none other than expert opinions. We'll see you guys next time, and hit the like before you get on out of here. And like always, traders, it's a battle in this market, and it looks like the bull market is back. We'll see how this rally continues to push. Do we get a takedown? Right now, it doesn't look too bad for the close as long as we keep above that 217, the 417 there for me on the SPY. I'll be in the bullish tune. So we'll see what happens. I'll see you tomorrow, guys. Hit the thumbs on up.